What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. We're going to go over these stocks on the macro and the micro time frame. That way we get an idea of what's happening on the overall picture and what's happening on the day-to-day. But before we get started and talk about our charts and price targets, let's go ahead and talk about the most important event that happened this week, which was the FOMC event, in which we saw the Federal Reserve leave interest rates unchanged. However, they did say that they do still see 3 interest rate cuts this year. Obviously, the market reacted very positively to the news, and it spiked towards all-time highs. Many stocks closed near their 52-week highs as well. Now, SPY in specific, if you are watching the index, you need to look first at the daily time frame in order to determine where it's trading on the overall picture. In our last video, we mentioned that the 10 and 20-day moving averages, which are these blue and purple lines on our charts, have been acting as a support throughout this entire year, and we will maintain our strong bullish outlook on SPY as long as it holds those levels. Although we expect SPY to continue rallying higher, we do expect to see some pushback going into the rest of the week. We will likely see some kind of pullbacks, and these are the targets that we're focused on. First things first, we need SPY to pull back towards 515.80 to retest that level in order for it to confirm this breakout. If we get a retest and a bounce, then that would be a very strong reinforcement for the breakout, and we will likely rally higher. If we pull back and break below 515.80, unfortunately we do not see much support below that level until about 510.30, and even then that is not a very strong support. As you can see, SPY's rally since yesterday was very vertical, so therefore when it does see a little bit of weakness or there's a little bit of uncertainty, this vertical rally will be filled back very quickly, so just keep that in mind when you're positioning yourself. If you are bullish on SPY and you are looking for continuation, you need a breakout above 501.40 or 521.40 in order for it to continue towards its 524 to 525 target. 504.40 remains to be our most critical support. If SPY breaks below that level, then it has a gap to fill down towards 497 that was created a few weeks ago at the end of February. The next stock on our watch list is going to be Tesla, and like any other stock, we always like to start off with the macro time frame, which is the daily time frame in this case. Tesla did something tremendous today, and it moved back above its 10-day moving average, which is a line that it has been fighting ever since it broke back below it in the beginning of March. You can see that as soon as it broke below this line, it sold off for the weeks to follow. So now that it is above that line, buyers may show some skin and try to move the stock higher. With that being said, the first thing you need to focus on every single day is where did Tesla's daily candle open in relation to that 10-day moving average, and where did it close in relation to that 10-day moving average. Buyers are going to try to maintain control as long as it's above it, but if it breaks back below it, Tesla is likely to move back to retest that 160 level. If you are looking at Tesla on the shorter term time frame, here are some levels for you to focus on. Let's go ahead and update this chart. We haven't updated it yet. We're going to update it together. We still have a significant support for Tesla at 152, which was caused right back here and sometime in April of last year. So we still have that as our main support. Tesla broke below the 164.50 support and came all the way down to 160 before bouncing. So we're going to move this support to 160. Tesla no longer has a resistance at 172 because it broke back above it, but we still see a resistance at 184. If it breaks above that level, we actually do not see much of a resistance till about 200. So above 184, Tesla can definitely squeeze higher if you are looking for a higher move. Now the next stock on our watch list is going to be Apple, which received some bad news after hours. Apple is now at risk of being sued by the Department of Justice, and you can see that Apple's reaction to that was very poor. However, general trend seems to be bullish for the week, but if we zoom out further and we look at the daily time frame, we see that Apple has been in a downtrend for most of the year. Today, it recovered back above the 10 and 20-day moving averages, which means that just like Tesla, the first thing and last thing you should look at every single day is where did that daily candle close in relation to the 10 and 20-day moving averages. After the DOJ news or in that lawsuit news, if Apple gaps to open below the 10 or 20-day moving averages, that means it will likely sell back down, and here are some levels that you need to focus on. If you're looking at Apple on the shorter term time frame, here are your levels. First things first, you have a support at 168.50. Let's go ahead and place that support at 168.50. That way you can follow along. So we're going to go ahead and update that here. So support at 168.50. And we have another support for Apple at 165.50. So you can see that Apple at 165.50 bounced very strongly, and this was a point in which Apple bounced for the weeks and months to follow. And so if it breaks below that level, things can get very ugly very quickly for Apple, and it will likely sell off towards that 160 level following that break. Now, we're not saying that this will happen this week, but it is expected to happen, especially if Apple moves back below its 10 and 20-day moving averages. The way we got this 178.70 is this was simply the highest point it reached before getting rejected here, so we need a breakout above that level for continuation. And then the 185.20 was a resistance derived from this rejection here, where you can see Apple struggled to get above that one, twice, and three times, which makes 185.20 a very strong resistance. The next stock on our watch list is going to be AMD. Now, AMD came down to its 50-day moving average this week. The last time that it came near this level, you can see that it bounced back and continued rallying into all-time highs. Many traders are wondering if the same thing is going to happen for AMD this time around. So far, AMD came below its 50-day moving average, and you can see that buyers stepped in to rescue it, which means that the first thing you need to look at and the last thing you need to look at every day on AMD's daily chart is where its daily candle opened and closed in relation to that 50-day moving average. The 10 and 20-day moving averages were acting as a very nice support for AMD up until this week when it broke below them and came down to that 50-day moving average. Now, the 50-day moving average is more important than the 10 and 20-day moving averages because it is a longer time frame, and Wall Street and institutional traders use the 50-day moving average to gauge whether a stock is in a bullish or in a bearish trend. AMD has defended that level, but it didn't defend it that strongly, so it is still at risk of selling off below it. If you are looking at AMD on the shorter term time frame, here are some levels that you need to focus on. First things first, AMD already broke this support, so let's go ahead and remove it. We're going to go ahead and move this to here, which was 185.70. So we have a resistance on AMD here at 185.70 that we need to address. So AMD needs to break above that level in order for it to continue rallying any higher. To the downside, AMD has a support at 170.170 and another support here at 161.50. AMD, if it cannot get above that 185.70 resistance, then it will likely be rejected back down. And below 170.170, we are bearish on the stock to move and fill this gap down and move towards 161.50. The next stock on our watch list is going to be Nvidia. Nvidia, still one of the strongest stocks on the market, but it is showing a little bit of weakness this week. Semiconductors in general have needed to cool down. While they were cooling down, other parts of the market have been pushing, such as energy and materials. So keep in mind that semiconductors are still very strong, but it doesn't mean that there aren't opportunities in other sides of the market, such as you can see here. So while semiconductors have been cooling down, other parts of the market have been rallying, which is a completely healthy sign that we are in a bullish market. For Nvidia in general, or looking at Nvidia's longer term time frame, you can see that Nvidia is trading above all of its healthy moving averages, and today it closed just above that 10-day moving average. So just like the other stocks that we've already mentioned, every day and at the end of every day, you should be looking at the daily time frame to see where did the daily candle close in relation to its closest moving averages. So far, Nvidia is looking very bullish, but we don't expect Nvidia to rally up until the end of day Friday or going into next week, and here are some levels to focus on. First things first, you have a resistance at 936.60 that Nvidia will need to get above, but ultimately it needs to break above 974 for buyers to take full control and continue the rally towards 1,000. To the downside, we have a support at 831. If Nvidia loses that support, we are still slightly bullish, and we will remain bullish until Nvidia breaks below 770. Below 770, we expect the sell-off to continue, and then at that point, it will likely fill this gap down towards 675. Remember, these are very aggressive downside and upside price targets, so make sure you're checking back in so we can continue updating you on these levels. Next stock on our watch list is going to be Meta. Meta has been feeding off its earnings push, and you can see that buyers have not been willing to let go of this stock, probably because they raised their dividend. Remember, they raised their dividend at a time in which Meta was already trading at a 52-week high, and buyers are still very bullish on it, so they didn't see any reason to sell now that Meta is paying a higher dividend, and you can see that that's following through on the chart. On the daily time frame, Meta dipped slightly below its 10 and 20-day moving averages this week, but you can see that buyers were still able to recover it after today's FOMC announcement, and here are some levels to focus on if you are looking at Meta. Meta still has a support at 476 that we're going to leave in place, A resistance at 503.40 has already been broken above, so let's see if it has any new resistance to focus on. Yes, it does at 508.20. You can see that Meta's highs were at 508.20 before getting rejected today, so we're going to move this resistance to 508.20. So that means going into tomorrow and the rest of the week, you need to break out above that level for Meta to continue towards its all-time high of 523.57. Last and final stock on our watch list is going to be Amazon. Amazon has been a sleeping giant for quite a while, but we do expect a big push from this one very soon. You can see that like Meta, it has been benefiting off of their last earnings. It gapped up and has continued moving up. We actually teach this power earnings gap up strategy in our course. If you are interested in learning, make sure you check out the link in the bio. Or if you want daily setups, we will also be providing a link in the bio for those. But for Amazon in specific, just like Meta, it recovered back above its 10 and 20-day moving averages today, closer to its 52-week highs. Here are some levels to focus on for Amazon. First things first, we have a resistance at 180.15. Amazon's going to need to break above that level to continue towards our next price target between 183 to 184. To the downside, we have a support at 170, 175. Below that level, Amazon is likely to sell off to fill this gap and even sell off towards 165 to 166. So that's all we have for you guys. Thank you so much for checking in. Don't forget to subscribe and like.